Let's get across the market open now. Jessica Amir joining us from Moomoo. Jess, happy Tuesday to you. We are seeing, we saw a rally on Friday. That's continuing today in the session just gone on Wall Street. What are you seeing at the moment, and particularly those stocks that are moving?
Yeah, there's so much going on. So we're waiting to hear from the Fed this week. And of course, Nvidia kicks off their key event, their annual AI conference, GTC. So there is some, I guess, expected to be some boost in sentiment later this week. But for the most part, we're seeing those gains in the key Magnificent Seven stocks. They're being eroded, but that's beneath the surface. If we have a look high level, we are seeing the S&P 500 and the Nasdaq 100 move up for the second straight day. So the Nasdaq 100, it's now out of a correction. But for the most part, we are seeing the Magnificent Seven stocks still in a bear market. So they're still down 20%. I do really think that we need to be really cautious here and pick our wins, because if we dive to the sectors, that's really telling that institutional money, people with deep pockets, are really favouring defensive plays. So we're seeing industrials do really well. Healthcare, specifically in the US, is outperforming. It's a very different scenario to our market, but we really need to pay attention to these gains. And that's where you're probably going to see leadership potentially that continue in the second half of the year.
Just refocusing on megatech in the States, you mentioned Nvidia, that annual conference underway. Of course, it has been the market darling. Seems to have lost some of that luster, though, of course, particularly over the past month as we've seen that big pullback. What does that conference actually do as far as the investor sentiment is concerned?
Well, around this time of year, it usually does deliver, pack a punch. Positive sentiment picks up, and we typically see the stock rally in the lead up to the conference, during the conference, but then the stock throughout history tends to slide after the conference. So you really need to be thinking about that, and then also adding in the extra layer of complexity right now. Big picture, we are still waiting for all the tariffs to be announced. Of course, we've got to remember April 1, April 2, depending on the time zone that you're listening to this in. That is when we're expected to see all Trump's tariffs go on the table. And of course, Trump's tariffs on chips, that is going to hurt tech stocks. We've got to remember in the 2018 trade war, Andrew, we saw the semiconductor sector that actually fell 20%. Rather, it was a bigger pullback than that. It was almost 30%, so a 29% pullback. So we're not there yet. So what I'm saying is you might expect some gains, some hot sauce, extra punch this week. But do be thinking about, if you are trading, maybe taking some skin off the table, taking some gains, and then parking them from a rainy day, because I do think that the semiconductor sector, tech at large, is probably headed lower.
Well, in fact, and we've seen institutional investors, Jess, you're making the point there that they're switching out of that mega cap growth stocks, being a little more defensive in terms of particularly healthcare.
Yeah, absolutely. So healthcare is continuing to dominate the leaderboard. This year, we've seen the most flows and the most upside gains as well. So go into healthcare. So it is really pleasing to see that those largest healthcare stocks have been generating the most for performance for institutional investors and retail investors who are positioned in those institutional funds. Also, second of all, Andrew, the other defensive play is that energy stocks are continuing to outperform. They're the second best performer this year. And of course, in defensive play, what other sectors are there? Well, there's utilities. So we need to keep the lights on, regardless of economic growth grinding lower because of recession fears, but it's more at the hands of tariffs. So regardless of the extra tariffs that are going to come into play, we do need to think that the healthcare and utility sectors, and indeed energy, are expected to continue to breathe lots of love and light into the market, and particularly keeping in mind that they are sheltered from tariffs.
Jess, let's focus on the local market. So certainly a standout subsector has been the gold miners. Look, not surprising given The bullion price has eclipsed that key $3,000 level.
Yeah, so we've been expecting this for some time, or I've been a gold bull for some years now. And indeed, you might be expecting the narrative to, I guess, thicken up, and that is because there's lots of uncertainty. The volatility VIX index still really hasn't peaked in terms of a like-for-like comparison. If we bring up the 2018 trade war playbook into the equation, we did see the VIX index peak well over 30 in 2018. So that means you might be expecting a lot more flows to go into gold, given that it's deemed the safe haven of all safe havens. The other thing that is supporting gold's upside, Andrew, is the demise and the continued fall of the US dollar. And of course, this week, if we do see the Federal Reserve map out their dot plot, potentially even maybe signaling one further cut, if that does happen, the futures are suggesting that there's a 68% chance of a Fed cut in June. If we do see that, that means more downside for the US dollar, and of course more downside for the USD means more up and atom for the gold price. So I'd be expecting more gains to be had on the ASX gold darlings. So we're seeing West African Resources, it's up almost 56% this year, and then we're seeing Evolution, Genesis, that's Evolution Mining, Genesis Minerals and Regis Resources, they're all up about 40% following West African Resources higher. But by the by, whatever gold play you are looking at, looks that all are punching to the upside. But it is could be worth its weight in gold, that it might be worth paying attention to the largest of the large, and that is, of course, Newmont, which you can buy on the ASX as well.
Certainly worth their weight in gold, Jess. Look, you've pointing out what's going on in the industrials at the moment too.
Yeah, really interesting to see that industrials are the second best performer this year. I guess the market is telling us, or the market believes, that industrials will be a key winner of the Australian post-election infrastructure stimulus boost. So we're seeing Fletcher Building, Ventia, Monadelphous, you name it, Worley Parsons, Brambles, the pallet builder, and even toll road operators and builders like Atlas Arteria, all making sizable gains. They're well and truly outperforming the broad Aussie share market, and of course, well and truly outperforming the tech-heavy Nasdaq in the US. So some of the gains that we're seeing in this space, Andrew, are around 15, 17%. But out of the bunch that I've just mentioned, Atlas Arteria is only up 5%. Still, it's better than a kick in the face with a golf shoe. It is worthwhile mentioning that you might be expecting these sectors to continue to see more flows because they're insulated from tariffs, and they're probably going to be winners of stimulus post Aussie election.
And just finally, a quick look at WiseTech, attracting some attention there, not the least, of course, because it's fallen so far. What are we seeing?
Yeah, I might be loved and loathed for saying this, but I think it's worthwhile to point out the fact that their shares are down 40%, and I've been tracking WiseTech for some years now. And the reason I'm saying this looks compelling for a long-term potential buy and hold, perhaps, is because history suggests that the last time that they were down 40% was in 2021, 2022. They rallied and hit a new record all-time high just after 1 month and 27 days. So if history repeats and we see them bounce out of this beyond bear market, you might be in for a very, I guess, I don't know how to put it. You might be in for throwing a party of all parties if their stock rallies up just like it has in history. But there's a good reason for that. We do know that, look, despite the allegations upon the former founder and despite, I guess, the mix-up at the board, we do know that their key clients, CargoWise's key clients, have said that they're staying. They're not really fazed by the allegations. They still want to do business at the end of the day. And the fact of the matter is WiseTech is also the leader almost a monopoly in freight forwarding software. So there is a very good reason why I'm just painting out that scenario of a very probable rebound. It's not a matter of potentially if, it's more a matter of when their shares will probably rebound and hit a new record all-time high.